it was kind of like consolidation, but with a choppiness in the trade. Coming to the sectoral performance, you'll see that the performers from the pharma, media, energy, auto, and realty pack, they did well. Wherein the financial services, banking, and financial services were among the top contributors on the losing side, alongside with the FMCG majors. Talking about top five gainers, a couple of names from the rather three names from the energy basket: BPCL, Coal India, and ONGC. But at the top of the list, surprisingly, we have SBI. Means the PSU basket clearly outshined the private banking players, and that's why the index is in red. But SBI is among the top 50 gainers in the Nifty 50 basket, and BPCL also posted handsome gains of over 10%. Coming to the losers, a consistent name in this list, UPL, wherein we are seeing a gradual decline with every passing week. And if you remember that we kept on mentioning this during our webinar, this is the only stock in the Nifty 50 counter which couldn't reclaim its 200 EMA despite the index making a newer record highs with every passing week. So that clearly shows the kind of underperformance that we are seeing in the stock, and it's not slowing down yet. So we are still seeing this pressure continuing. Then we have ITC from the FMCG space, which witnessed a sharp decline, followed by Bajaj Finserv, Kotak Bank, and Britannia. So this is what the performance was when it comes to this passing week. Now, what we are anticipating in the index. So last week, the hurdles remain the same. That we talked about 22,150. Until we break this mark, we are not going to see the positive tone re-emerging or the momentum witnessing in the market. So we maintain that bias that until we decisively reclaim rather 22,150, the possibility of Nifty making a sustainable up move seems very low. So basically, this is a zone that we are seeing that we have tested almost twice now. Good part is that somehow amid all this choppiness that we are seeing in the index, we are somehow holding this 20 EMA short-term moving averages. So yesterday we had a day of sharp decline, but we managed to hold that level. Intraday we penetrated the same today, but at the end we ended above 20 EMA. So somehow it's a consolidation with a positive tone so far, and until we break 21,600, this consolidation will continue. The major support now comes around this 21,450. That's the low of this particular candle, green candle, and major would be around 21,200 mark, which is closer to this zone, the previous swing low. So as of now, we feel that indications are mixed. Honestly, why? Because we'll talk about in detail in the next slide when we talk about banking. Because other sectors, they have done pretty well in the recent month. You talk about energy, you talk about auto, metals. They have done their bit. Now, banking, financials, which holds nearly 40% weight, without their participation, it's almost impossible for the index to reclaim the record highs or to inch toward a newer high. So the idea is now one should maintain stock specific approach at least for a time being now, and prefer hedge position. Hedge position means in case if you're having like 3-4 longs, maintain few shorts also. So that is how one can trade in the market like this, wherein we are seeing consolidation and extreme volatility also. So these are the key levels, that 22,150, then once we cross, then 22,500, and the support zone that we've already discussed. Now the major factor, basically the key decider, is going to be the banking index. So this week also extreme volatility, and the kind of swings that we are witnessing. There could be a breather next week, but the tone is still negative. So just in line with what we discussed about Nifty, that until we reclaim 22,150, for banking is 47,000 mark, which is the major hurdle. Intermediate we have 45,700 to 46,300. These are the key area where banking is going to face the resistance. So we are almost closer to that mark, the first hurdle. Once we cross, then 46,300, this red line is going to be the next area of the hurdle. Good part is that today we saw the private banking majors, especially Axis, ICICI, witnessing a rebound. So this is good, but again, the underperformers, they are still not showing any sign of reversal. Like SDFC, Kotak, Anderson Bank, they are still reading under pressure. So with this recovery, it's too early to say that banking is out of woods. So we have to see the focus should be on banking next week, how the banking performs, because other sectors, as I already said, they have done their part. For Nifty to make a new high, participation of banking and financials is essential now. We can't think about Reliance, which is holding strong, may result in a sustained up move beyond 20 to 150. Though it's market, anything can happen, but it seems unreal considering that we have already seen very strong participation from the other index heavyweights. So focus should be on banking and private banking majors rather. Downside 44,500, this zone. Once we break, then somewhere close to around this 43,700, 43,600, 800 zone is something that we expect it might take a breather. So as of now, there is no clear indication. Banking is still look wobbly to us, and private banking major is something that one should be focusing in. And if you have any existing trade, do maintain strict stop losses if you are carrying them overnight. So this is about both the indices. Now let's discuss about the stock ideas wherein one can look at for buying or selling opportunities. The first one that we have on the list is Dr. Reddy's. So Dr. Reddy's, we have discussed earlier also that within the pharma space, in fact, pharma is also buzzing today alongside with the cement counters. Dr. Reddy's is one consistent name where we are seeing steady but sustained up move. It's not very volatile either, like just what we are seeing in the other pharma counters. So post this consolidation range breakout, it formed a higher pivot above 20 EMA, and then we have seen a fresh breakout from the same as well, and we are seeing sustained move, up move. In this week also it managed to gain nearly 2%. So we believe that in case if there be any profiting in the market, Dr. Reddy is likely to hold these levels close to around 5,900, 6,000 zone. So this is one such counter which one can look for buying opportunity. Next on the list is Naukri from the IT space, which is InfoEdge. So it's ITS basically, and this counter we have been discussing after such a long time, because it's more of like a long corrective phase. As you can see, that stock was reeling under pressure for almost 1.5 years while trading below this 4,800 mark. It made an attempt of recovery here, but it couldn't sustain, and then followed by a dip. But this time the low was higher, and post this breakout, this range breakout, we have seen the consolidation happening above the upper band, means above the neckline area of the range. So this gives us comfort now that the kind of volumes which is rising every passing week plus price action, this gives us comfort that the stock can gradually inch towards its previous highs. So maybe the first beta could be close to around 58, 5,900 levels, and then around this 6,400, which was the previous distribution zone. But downside seems capped. So 5,200, 5,000 is now the strong support zone for Naukri. So this is one such stock that one can look at for long trade. Lastly on the list, Bajaj Finserv. So a consistent underperformer. What we are seeing, especially from last 2-3 months, there was hardly any participation when the NBFC counters are buzzing. So stock like Shriram, Chola, they all were doing well, but it remained under pressure. As you can see, that's a clear, declining trend line. It tested thrice, though it made a marginal attempt to cross, but it couldn't sustain. And then we have this a small distribution pattern formation of head and shoulder, which is a distribution pattern formation on the weekly charts. So this indicates a possibility of decline towards 1450 to 1400 levels in the near future and maybe lower. So this stock is something that one can look for shorting opportunity. So just to sum it up, Nifty, our view remains the same. There is no change in the view what we shared last week, that 22,150. Until we break, we are not going to see any decisive up move. Now the challenging part is that we are seeing 20 EMA, which is around 21,600, 650 zone, getting penetrated. So this is something that one should be cautious of. And that's the reason why we are recommending to maintain position on the both side. And we have shared few names which look good to us for both long and short side. Banking is comparatively weaker. Still, if we'll exclude, today's rebound that we saw in the banking space, largely the picture still remains the same, and we have multiple resistance to cross. Major hurdle at 47, but prior to that, 45,700 to 46,300. So private banking majors should be the focus area for the clues that how the markets are going to perform in the coming weeks. Other than that, on the stock specific front, we talked about Dr. Reddy's, which look positive, Naukri, wherein we are seeing fresh breakout, and a fresh breakdown candidate, Bajaj Finserv. So this is all from the presentation part. Now we'll just share a quick poll. So please fill in your feedbacks, and then you can start posting your question using that Q&A tab. Please quickly fill this feedback, and then you can start posting your question using that Q&A tab. All right, so we are almost done now. So let's start with Q&A now. All right, so first question from Mr. Ashok, why defense stocks are looking weak? The defense stocks are not looking weak. It's just a day of correction that we saw in some of these top names, and it's too early to say that they have turned weak. Of course, profit taking. In fact, in the PSU basket, if you remember the last time also in the webinar, if you were there, we've discussed about PSU names looking slightly stretched. So, and mostly stocks fall from the PSU basket within the defense category. So we expect some consolidation, some profit taking after this phenomenal surge. So if you have any position in the defense related stock, do maintain 6 stop losses. Alongside with that, I'll also reiterate my view that PSU counters, be it the PSU enterprises, means all the railway stocks, PFC, RAC, the financing counters, recently listed counters like IRFC, IRIDA, do maintain caution, reduce your position. The kind of move that we have seen in all these counters, possibility of consolidation, profit taking seems much higher in comparison to the further rise. So the entire PSU pack, yes, mid cap, small cap, also selectively one can look for booking profit, because see, the idea is, though we are not seeing any decisive sell-off in the broader indices and the PSUs, but it's important to book profits also. It's not about when the markets are out of hands and when things completely go out of hands, then only we should take action. So in a market like this, wherein we are getting the opportunity to book profit, at least book 50% of your profit and maintain your trading stop loss also. Okay, it's not a query, it's a request from Mr. Tinku that Hindi में आप कृपया बात करें. We have this, मैं एक ये हिंदी में शेयर कर देता हूँ just for his knowledge कि इसी वेबिनार का एक शॉर्ट बेसिकली वीडियो हम रिकॉर्ड करते हैं जो कि हम अपने सोशल चैनल्स पे पोस्ट करते हैं। तो यू कैन रेफर दैट वीडियो, और उस वीडियो में बेसिकली जो भी हमने बात की है जस्ट उसको समरी करते हैं, जल्दी से उसको समझा देते हैं 5 मिनट में। तो यू कैन रेफर दैट वीडियो और होपफुली वो आपको हेल्प करेगा। See, targets and stop losses we don't share of all the stocks that we talked about, Mr. Aya. That is just an, as I've said, is an observation. So it's completely up to you on your own discretion. What all stock that you wish to trade and at what levels. Uh, it's completely your own discretion. Okay, next we have Mr. Manish. Bank Nifty and Nifty. So the range we have shared in the beginning itself, that 20 to 150, that's the major hurdle. Until we break the same, I'm not seeing any sign of recovery. And 21,600, that's the immediate support. If we break that, then 21,450 and 21,200. Banking, 45,700, 46,300, ultimate 47,000. On the downside, 44,500 is something that you should maintain a strict stop in case if you have any long trades. No stock specific queries, please. I have requested at the beginning. Okay, next we have Mr. Linga on metal pharma for the next week. So I still feel, Mr. Linga, that stocks from the pharma and metal space are, placed comparatively better if I'll compare it with the other sectors wherein we see, slightly overbought readings, more overweight readings. But now we need to be cautious because in some of these names, like in pharma basket, we've talked about Dr. Reddy's, wherein we see, potential for further up move. At the same time, granules, it may see some consolidation, but possibility of gradual recovery from the current level seems high. In the metal space, after this dip, Tata Steel is the one candidate which I feel comfortable with. Other names, let them consolidate because the move was almost vertical in some of these metal counters, be it National Aluminium, SAIL, Hind Copper, and all. So one should be very stock specific within this space also. Okay, next we don't cigarette sector. So basically, it's not a sector. It's a means some of these stocks which are listed in this space are not pure play, except a couple of names. Godfrey Flip is basically the name. So we don't track it closely, so we can't comment on that. So ITC, since it's still in the fall in the category, and Godfrey Phillip is still holding strong, though it's a low volume counter because the float is less. I would recommend to maintain a stop at 2,300 in case if you have any position. And if it witnesses any bounce toward, let's say, 2,450, 2,500, one can look for booking profit. ITC is something that one should avoid for a time being now. It looks sideways negative to us. What about investing in FMCG? Investing is definitely can be considered in some of these names wherein we are seeing corrections. So stock like HUL, ITC, they are offering decent opportunity by witnessing the recent correction. So if the view is long term, definitely you can look for long trades. We have discussed about metal counters, Mr. Kumar, Jitendra Kumar. So hope it answers your queries. Okay, next question. Why today's market? So markets were up today, and we are not concerned about the why part. Here we address what we are seeing in the market. So please follow the levels and trade accordingly. Again, stock specific queries on metal stock that we have already answered, Mr. Mahesh. So why banking industry is not performing? So again, it's not the part of this webinar. We are concerned about the what part, and until we see any improvement on how the banking index is underperforming or witnessing pressure, there's no point arguing with the market. So if the market is showing downtrend, we should participate accordingly. Okay, so Mr. Vijaya Raghavan, which sector to look at for investing? For long term, I feel IT looks still good to us. Wherein we have some of these top name like TCS, HCL Tech, uh, wherein we started seeing traction now after a long period of underperformance. Then some of these pharma names that we've discussed during the presentation itself, alongside with private banking measures which are available on good bargains, stock like SDFC and all. So these are some of the names which one can look at for investment in medium to long term perspective. IT sector, should you book profit? No, you should not. And you just shared that IT we have a positive view. There could be a bit of a gyration in between, but overall the trend looks positive to us. Okay, so next question from Mr. Nilesh Javri, that how to keep trading stop losses. So there are multiple ways basically that one can use tools which are available. So people use moving averages, people use their buying price as the trailing stop the moment the stock turns positive. So it's completely up to you basically how you manage your position. So if you are risk averse. So the moment you see a stock, seeing in green, let's say 1%, 2%, your idle step should be, you know, to the point wherein your trading cost means your transaction cost plus your buying price should meet. So that should be your trailing stop. And once we are in profit, let's say 5-6%, your trailing stop should be at least half of that, so that you are not making any losses. So hope it answers your query. Uh, Okay, so again, stock specific queries. Some still, if they are active, I can't, well, it's a query or it's an issue. So in case, Mr. Shiva, if you have any issue, you can raise to us if you are associated with us, for the platform or anything. You can raise a query and at vcare@religare.com, and they'll, help you to sort that out. Okay, next we have again, see, I have requested not to please share stock specific queries so that we can end the webinar on time and utilize this half an hour to the fullest. Means once you start preparing for your next week trade or your investment strategy, you should have a broader outline in place that which sector that you would prefer. Uh, so again, if I have to summarize, banking is something that we are avoiding for a time being now. Media is we are avoiding. The rest of the sectors are okay. And for any reversal also, we need participation from the banking. So until we see the price action in favor of reversal or recovery in banking, there will be no major up move in the markets. So stay stock specific. Pharma, IT is something that we feel are comparatively better to look at. Okay, next question from Mr. Aryan Gaur. For the next 10 years, the initiative will get. I appreciate that you have such a long time horizon that for the investments. But again, it's very difficult to comment from the 10 years or 20 years of time horizon. I feel it's more prudent that if you review your strategy, even if you're a long-term investor, every 6 months to a year, depending upon your exposure to any particular sector. But yes, all sectors, when the economy grow, all sectors participate. So energy is no different, and of course, the kind of initiatives that we have heard from the recent times definitely looks positive for the sector. Okay, so this is important. This is interesting also that Mr. Nilesh Javri, that many stocks are running a 50% up move that we've already seen from the buying price. So see, we have to somehow accept this, that what was our expectation from that investment. If my investment expectations were 100%, then you are 50% of that target. and you may wait for 50%, provided you actually see something, happening extraordinary in next, 1 year, 2 year time down the line. But realistically, if you have, a return, let's say 50%, 40%, 30% in less than 6 months, at least 50% of the profit you should take and maintain a trailing stop also. If it is just like, a windfall kind gain that we are seeing in most of these stocks, especially in the PSU basket, that is what we have recommended. You at least book 50% of your profit and trail your stop losses. Okay, so PSU bank, PSU sectors, we have already discussed. Stock specific queries again. Which sector should be picked if the market correct big? So, Mr. Benjamin, the same pharma, IT. If we talk about sectors, that should be the preferred. And alongside with, yes, some of the names from the auto space, energies basket also, but selectively. What about power sector? Power sector, we feel that they are also looking slightly exhausted after the recent surge. So booking profit and let them consolidate. So fresh buying, other than the sector that we have discussed, I feel it's too early, considering that we have hardly seen any consolidation in these names. Okay, next we have infra and real estate. So Kalpana ji, it's a broader umbrella infra. So it talks about cement, it talks about metal, everything. So cement today was under focus, like we saw some of these names doing exceptionally well, like Grasim, ACC, Ambuja. So selectively, yes, the near term looks positive for all these cement names. In real estate, we feel since the sector has already done exceptionally well, book at least partial profit and again wait for consolidation. We have not seen any major consolidation in the realty space also. So some of these good names like overall realty, Godrej property, if we see some correction, then only you should consider. But for fresh investment, yeah, pharma looks comparatively better. Okay, so next question on SIP, though it's something that is not the part of the webinar presentation. So if I have an investment through SIP, shall I continue? If the markets are currently high. So yes, so SIP is something that we are not looking for short-term gains, right? So if your investment for long-term, you can't time the markets. So it's better that you can continue with your SIPs, provided that you have selected the schemes rightly. Again, stock-specific queries, stock-specific queries. All right. See, I've requested that again, same mutual fund queries. So one should not look for short term if you have made investments. So we have answered all the queries, barring some of these, stock specific queries. So please, yes, one railway sectors that Mr. Deepak, we have discussed about booking profit in the railways name also, and considering the kind of overbought readings that we have. So possibility of consolidation or a decline seems much higher, from the current levels instead of a newer highs. So yeah, that is all, I guess. Yes, so mostly we have covered. So thank you everyone for participating. And again, if I missed something, we're really sorry, but we cannot accommodate stock specific queries. Otherwise, the session might end by 5:30. So if you are associated with us, definitely you can mail us your queries through your brand, through your franchise, and we are happy to answer. So thank you everyone. Next week, same time, we'll connect again. Thank you.